The U.S. national debt has reached around $38 trillion as of November 2025. But what does that number actually mean? And how much debt is too much for a country like the United States? Let's break it down in a simple way. The national debt is the total amount the federal government owes because it consistently spends more than it collects in taxes. Each year that the government runs a deficit, it fills the gap by issuing treasury bonds. Those bonds stack up over time, and the full stack is what we call the national debt. To understand how fast this has grown, go back to the early 2000s. The debt was a fraction of today's level. After the financial crisis in 2008, it jumped. During the pandemic in 2020, it jumped again when the government spent heavily to support the economy. And in recent years, higher interest rates and still large deficits have pushed the debt even further. Today, the debt is larger than the entire size of the U.S. economy, meaning it sits above 100% of GDP. That doesn't automatically mean disaster, but it does raise some important questions. So why is the debt becoming a bigger concern now? There are three main reasons. First, interest costs. The bigger the debt and the higher the interest rates, the more the government has to pay every year just to service what it already owes. Annual interest payments are now close to $1 trillion. That means a huge share of tax revenue is going toward interest instead of things like infrastructure, defense, or healthcare. Second, less flexibility during crises. When emergencies happen, like recessions, wars, or natural disasters, governments often need to borrow more. But borrowing becomes more difficult and expensive when starting from such a high level of debt. Third, long-term pressure from an aging population. Programs like Social Security and Medicare cost more every year as the population grows older, while revenue does not grow at the same pace. Unless something changes, this structural gap keeps pushing the debt upward. So if the debt is so big, why hasn't the U.S. faced a crisis? Because the country has major advantages. The U.S. dollar is still the world's reserve currency. Global investors see U.S. Treasury bonds as some of the safest assets in the world. That strong demand helps keep borrowing costs lower than they would be for most other countries. The U.S. also has a large and innovative economy. Even when growth slows, the country produces enormous income every year, giving it the capacity to manage a high level of debt. And the U.S. is not alone. Several other advanced economies also carry very high debt levels. Japan's government debt, for example, is more than twice the size of its economy. Italy and others are above 100% as well. High debt does not automatically equal collapse. But now we reach the big question: how much debt is too much? There is no single number. What really matters is whether debt grows faster than the economy and whether interest rates stay higher than economic growth over time. If the economy grows quickly and interest rates fall, the debt becomes easier to manage. But if interest costs rise and deficits remain large, the debt can grow faster than the nation's ability to support it. That's when the path becomes unsustainable. The United States is not in a crisis today, but the trend is worrying. Over the next couple of decades, debt is projected to climb even higher, and interest payments may take an even larger share of the federal budget. In simple terms, the problem isn't that the U.S. is broke. The problem is that debt is rising faster than the economy, and interest is eating more and more of the government's financial space. How much is too much? There isn't a perfect answer. But the direction matters, and that direction is clearly moving upward. If you enjoy clear, data-driven explanations like this, consider subscribing to StockFYI. It really helps us grow and lets us bring more videos like this one.